Hi there, welcome to this week midweek market analysis. And before we get started, just like to wish everyone a Merry Christmas as well as a Happy New Year. Now, if you've been trading for some years, you would know or you would probably have observed that the last week of the year, as well as perhaps going into the very first week of a new year, the market are generally slow simply because of all the festive seasons and holidays that we are enjoying. So just one word of reminder over here, of course, if you are still actively trading for this week as well as going into next week, you probably want to adjust your mentality a little bit. You probably need to be more patient than usual. But having said that, as traders, I think it's important to be consistent, okay, in our process, in our routine. And therefore, for me personally, while I'm not actively taking any trades at this moment, I'm still actually managing and monitoring, as well as keeping myself updated as to what some of the things that are happening in the financial market. Okay, I think that's still very, very important. Right, so having said that, let's dive into our analysis over here for today and as well as this week here. Let's start off with the dollar index as usual. Okay, so overall, since last week until now, the price of the dollar hasn't really moved much. We can basically still see the market doing a little bit of a consolidation, and the overall structure remains very much intact as a crawl. Okay, a very slow move to the downside. And therefore our directional bias over here is still focusing on a potential reversal and holding on to a bullish bias. Now, one thing to note is, of course, because the market starts to slow down, there's still that possibility where this can still drop lower back towards the 103.40 area to retest the bottom, to give us a little bit of what we know as a double bottom before that potential rejection. That's one possibility. The other one over here, of course, the market doesn't need to come back and retest at 103. It can easily just take off and break above 104.60. So my suggestion here is, while we're maintaining a very bullish bias as of now, my suggestion is to give it some time, okay, especially during this week and next week. Let the market play out and give us more confirmation before we look for a potential entry setup. My final target on the dollar index as of now is around 108, okay, which is in line with this top of wave 4. Okay, and most of the time, there's a good possibility that after a crawl, the rejection or reversal would go back towards that wave 4 level. Okay, so keep an eye on that. And if we go over to the euro dollar, we can see a very, very prolonged consolidation, right? So if you put this here, you can see that's around mid-December until now. The market has been trading within a range stuck between 1.0575 to 1.0670. Okay, nothing surprising because we're already, as I said, going into the end of the year. The market tends to be slower. And in terms of directional bias, I'm actually focusing on a sell setup. Okay, unless proven otherwise. Of course, the market can still pop up a little bit to retest that previous high, giving us that double top. But as of now, okay, what I'm saying is if the market can break off this 1.0575 impulsively in a strong impulsive move, following that, maybe a tiny bit of a consolidation at the bottom of this trend line structure over here, this setup would give us a pretty decent sell trade back with a target at 1.0220. Okay, so again, I think the structure is clear, the setup is there. It's just a matter of timing because if the market is slow, you don't want to be too aggressive in entering any trade, because you don't want to be entering a trade and then the market start to consolidate and you're basically stuck in that zone. It's not easy to manage it, right, from a trading perspective as well as from a psychological point of view. Right, so that's on the euro dollar side. The pound dollar has been moving off to the downside as anticipated, but one thing that we didn't really anticipate was this little crawl here. Again, every time we see a crawl, we'll be cautious in the sell, especially as in terms of this structure over here, because we expect a deeper correction. The market didn't develop that as of now. Okay, so that can build up the possibility that perhaps this is what we call a running flat. It's still a valid structure from an Elliott Wave perspective. It's just that we usually don't forecast that at the very first. Okay, so right now what we see is after this little drop in a very slow fashion, we start to consolidate a little bit here. So overall direction did not change. We're essentially still looking for sell side with a final target around 1.1775. Which is around this low, and right now with this tiny bit of consolidation, we have a pretty neat range between 1.1990 and 1.2115. So my view here is that if we can get a break strongly below 1.1990, the down move would probably continue, and there's a good possibility we're gonna hit that 1.1775 target. If you do have any sell trade running on a pound dollar, okay, my suggestion is just trail your stops, manage your position, protect your profits as the price moves lower. Now, in terms of Aussie dollar, we also have a very clear structure over here. We have this 5-wave correction crawl pattern completed, and then we have a very decent little push down. Internally, if you are sharp, or if you're in the lower time frame, you can see this is a very clear 1, 2, 3, 4, 5, and then right now we're building up a 1, 2, 3, which is a WXY, or you can put it as an ABC. Okay, so it's a very classic 5-wave down, 3-wave correction from an Elliott Wave perspective, and our target projection over here for the completion of this 3-wave correction will be somewhere around 6,790, and if we can get that, okay, and coupled it with, let's say you go down to a lower time frame, coupled with a crawl formation like this, somewhere around 6,790 would be a pretty decent area to look for a sell. Okay, so again, you probably have some strategies involved from your side as well. For me, if this is a crawl on the lower time frame like H1, I will be looking for a breakout of that crawl with a stop just above that recent high, and that will give us a pretty decent sell trade to the downside. Okay, of course, what you can do is, for those of you who are more aggressive in your entry, you can also consider a sell limit. Okay, and then of course you can consider your stop loss just above that recent high, and a final target at 6,585 to be conservative. Okay, so that will be a trade setup that is, to me, very clear in terms of the structure that's developing right now, and the direction is also pretty straightforward. Right, so that's on Aussie dollar. In terms of dollar Canadian, there's a slight update over here. So previously we were looking for bullish opportunity, and I mentioned that as long as the market is able to respect this little trend line, over here we expect more upside. But recently, okay, the market actually broke off that trend line, and not only that, it actually broke off this low here too, currently testing it around that zone. So for that reason, I would suggest to be neutral right now. Potentially this correction has been completed, and the market can continue to drop and retest the previous low from here, giving us that impulse correction, impulse move. But it's too early to jump into a sell right now. My suggestion here is, we have this break, give it some time and see if we can develop into a 3-wave corrective structure. If we have that, the probability is going to be higher for the downside, and we're going to take that trade based on that little flag, right? So for now, just be neutral, be patient. Let's see how the market develops from here. Next up, we have the dollar yen. Okay, so last week, the yen actually strengthened quite significantly, so most of these yen pairs are falling because of the BOJ monetary policy updates. Right now we are seeing dollar yen doing a little bit of a consolidation over here. One thing to note though is that this little consolidation from a price action perspective looks like it's just one push to the upside. Usually if I want to see a decent move as a correction, we would like to see something like that, right? 1, 2, 3. We don't really have that for now. The pullback has also come back towards that 50% mark from this high to this low. So for now, I'm not really keen to take a sell yet. Perhaps what would be developing here is this can come back down, go back up, and this would develop into a 3-wave regular flat. Then at that point in time, it will be a much decent sell for me. Okay, so for me right now, the direction is bearish, but in terms of sell setup, I don't think it's the optimum time to be entering any trade yet. Okay, so we just keep an eye on that, see how the market develops. Then we have the gold. So gold over here is essentially moving up and down, but overall structural point of view, if you take a look from this level here all the way to here, this is essentially a crawl pattern, or you can call it a diagonal. Okay, so as long as this pattern remains intact, my bias here is still bearish, because there's a high probability that this would probably move back down before that bigger move up, if that's gonna happen. So one way to look for opportunity is to be, if you're more conservative, okay, wait for that confirmation, which means we want to see a break below 1801 in a mini impulsive way, and then wait for a tiny bit of consolidation below that structure. This would then give us that sell setup from an impulse correction perspective. Okay, so for now, the bias is there, the structure is clear, but in terms of timing of execution, my suggestion is just to be patient a little bit on that. Okay, crude oil, pretty slow market, but the overall trade is still doing pretty well. Okay, I have a position that we shared sometime back when we have this little crawl, this little push up, this pull back towards that 50% and 61.8 retracement. That would be a potential area to get involved. Right now the market is still moving higher. Okay, so if you have any buy trade running, just simply manage your position, trail your stops along the way. Our final target is still at $83. Nothing much has changed. Okay, so we just keep an eye on that, manage the positions along the way. Lastly, over here, in terms of the S&P and equities market in general, I doubt we're gonna have, we don't have a Christmas rally. So the next conversation that traders would have is, are we gonna get a January effect? Now, from my perspective, unlikely, because of how the macro perspective we're in right now, in context with the Federal Reserve still basically in a hiking process. It's just that perhaps the hiking rate is going to slow down, but that's still not going to be positive for the equities in general. So from a macro and fundamental point of view, we are still expecting a little bit more on the downside until the Fed actually hit a certain peak of its interest rate and start to talk about cutting rates soon. Then that would then transit into a very, very bullish regime for the equity side of things, right? But for now, from a technical point of view as well, right, we do see that confluence in terms of this is a very impulsive drop. If we can get a consolidation over here, we get an impulse correction, this still suggests more downside. So for now, just be patient. Anyway, this week, going into like the first half of next week, the equities market is generally going to be slow because of, again, all the holidays and things like that. Just be patient, just be neutral for now, and if you can get a decent pullback towards this 3918, which it has a 50% FIB, as well as some areas of confluence in the past, that would be a pretty area to look for a sell trade. Okay, so that's a quick update from me this week over here. Okay, again, for those of you trading, all the best and happy holidays. I'll see you guys in the next one.